Hey guys, welcome back. Drip Coach here, where we don't trust, we verify, and operate with integrity and transparency. Today, we are going to give a recap from Raoul Powell's latest Drinks with Raoul. What was this? About a week ago? Oh wow, 2 weeks. Jeez, feels like it was more recent. But anyway, as you guys know, I am in the Raoul Powell camp in regards to what's going to happen and that the bull run is not over. But man, oh man, is there a lot of fear, doom and gloom in the markets right now. So this video is November 5th, and we briefly wicked down to below 100K yesterday on the 4th, I believe it was. And yeah, we got down to a level 20 in the fear and greed index. Last time we were in the 20s was when we broke like 80K. So it's so fascinating to see market psychology and like go back and retrace what levels we were at when we had similar fear in the markets. This was all the tariff stuff. So only one person is going to be right at the end of this, and it's either going to be the Bears or the Bulls. But I believe by, again, listening to people who I feel are far smarter than me and been in the game much longer and connect the dots on all the different things rather than just, hey, number go up Bitcoin. It feels like there is definitely another leg to go, and there's just a bunch of catalysts affecting that. And that's what Raoul is going to break down in here. And it's going to start first with the, I'm about to say RSI, but it's not RSI. It's, business cycle. So, but that is directly, the ISM is tied directly to the RSI, which I've shown in the charts from Plan B. So there is definitely a bigger game being played with the money. And right now, of course, the shutdown's not helping at all. But looking at that and understanding that, or at least trying to wrap your head around it, or listening to people like Raoul who do understand it, can help you from not getting shaken out. And if you don't want to understand it to go that far, then it's use the don't fuck this up thesis and just stay humble, stack sats, and gamble 20% of your portfolio or less into other stuff that you can kind of take your eye off the ball or not give a crap if it shits the bed, which all the alts have been doing. Actually, I'm not gonna say all the alts. So a lot of people are waiting on altcoin season, but as I showed you guys, my alts are up. Now, it's not like a 5x, 10x or anything like that, but the alts that I put money into, not the ones that I'll show my portfolio later this week, not the kind of shit token alts, the ones further out on the risk curve, but my BNB from last cycle, OKB from last cycle, Cardano from last cycle, all those are up. They're not up a lot, but they're up at least a 2x on most of them. So depends on what you put your money in. But anyway, let's get into Raoul's thesis.
Right. So the business cycle. The business cycle is the daddy that drives earnings in the economy and is the kind of arbiter of economic growth. The business cycle has been lackluster. As you know, the ISM survey has been slow. The ISM survey is actually driven by liquidity, which leads by 6 months. Liquidity has been relatively choppy on a year-on-year basis, on a global basis, but ahead, we should start to see ISM grow. Note the little hook down in liquidity that's currently happening. Oh, that seems to correspond with other things that are going on right now, but that's a forward-looking thing. So liquidity has been pulling back somewhat, but we expect the business cycle to start to grow. Obviously, we've got this government shutdown. I'll come on to that in a sec. That may still kind of cause another month or two of weaker ISM because of the government sector. Maybe not. We'll have to wait and see. I'm indifferent to it because we know where it's going. And behind this indicator is probably 50 to show a lead on this. But what's important here is the GMI dominoes. And this is the liquidity cascade. Out in the future, in this lovely, attractive purple color, is the GMI Financial Conditions Index. That lives 9 months ahead of anything of the ISM. That is what leads it all. That's driven by interest rates. It's driven by commodity prices. It's driven by the dollar. And that has started weakening after a period of consolidation. So weakening here is this going up because it's inverted. So what we've got is easier financial conditions are going on. And we've seen that as rates have started to fall. So that is going on. That leads total liquidity by about 6 months. Now, there's a bit of a shifting lead lag here, but either way, we're expecting global liquidity to now follow GMI financial conditions. Does global liquidity have another down month? Probably, possibly, maybe 2 months. No, I think it's a month. And then what happens is it hooks up with financial conditions as we go into the end of the year. So October would print as a weaker month, obviously because of what is happening with the US government shutdown, where there's less liquidity being pumped in the system, but I'll come to that. And then the ISM follows suit. The ISM is where, when we get above 50 and start expanding, is where alt season is. It's where the Russell 2000 breaks out. It's where the small caps start going. It's where the riskier credit starts moving. That's the real game in town. You need a booming economy and lots of liquidity to drive the money shot. The way you.
So what that, TLDR tells me is that this is being kicked out further into next year. So he's talking about 9 months on the, I forgot the name of the chart that he actually showed, but leading indicator showing that things are weakening because it's inverted. That's the purple color. And then global liquidity is a 6 month. So you can see that these are all starting to consolidate here. And then there is this downtick. And then, like he said, also, which he could not have planned for or, didn't plan in here, and he's going to talk about later, is the government shutdown. So the easy way to think about that is that there is money to be injected, and that's what drives all the markets, and specifically the business cycle and crypto. But if the bank is closed, i.e. the government shut down, then you can't spend that money. Like, that money's not going out into the economy. Now, granted, we've seen from other countries' central banks that is what pretty much has caused the pump. But the big money driver is what the US does with their rates. Because remember, all the way back to Bretton Woods, all countries pegged their currency to the dollar. The dollar is what drives it all. So whether you like it or not, political or not, doesn't matter. The fact is, what the dollar does will dictate how the global liquidity is moved around the system. Again, carry trade, borrowing, all this other stuff. So it's like a dam is set up right now because of the government shutdown, and the money's there, but the bank is closed.
You can make money by just throwing a dart on your screen, and whatever it hits will go up. That's to come. Those are the banana zone points when things really accelerate. It's all coming. It's a matter of patience. Don't forget, the ISM has one data point a month, and you think you're trading it with your tick charts on your screen. You are sadly deluded. That's not how this works. So hence why you just kind of do nothing and let this play out. We've got the game here. The game here is that. The game here allows the asset prices to move because total liquidity is the thing that drives Bitcoin and the NASDAQ, which are the things we really care about. Interestingly, gold actually follows, or actually is basically current financial conditions. So financial conditions and gold are all in the future. And so when you look at gold against total liquidity, it's telling you liquidity is about to explode. And that's a really interesting thing. Gold has shifted around. Sometimes it's real rates, and other times it's other things. Other times it's just the dollar. But right now, gold's highest correlation in this kind of Bayesian world where probabilities shift and correlations shift is it's all about financial conditions. And it's basically telling us the financial conditions here are going to explode weaker. Okay, super interesting. Will it work out exactly like this? Hell no.
Yeah, that is a very interesting chart. So he's saying that gold is current financial conditions, and you see what gold has done. And this pulled back a little bit since, I think, on his chart, but this is showing like projections out with 12-month gold lead. So it's just a damn rocket ship up and to the right. So, and we've already seen a taste of that with the big spike of gold and people running out, long lines of people queuing to get gold. So yeah, I guess the easy framing for yourself is, are you going to be, like he said, try to find one tick chart or two data points if you're looking at previous Bitcoin cycles to base your future potential wealth on? Or are you going to zoom out and look at the global narrative people like Raoul are painting? It's up to you, really. I'm going to believe the former, because I believe there's a much bigger game played rather than typically what we've seen with the previous cycles and what Bitcoin was created by and run by, like CryptoPunks and Reddit threads, things of that nature. And now it's maturing and doing what it was actually engineered to do. And because of that, it's not going to perform the same, in my humble opinion. So again, it doesn't really matter which side of the camp you choose to navigate towards, as long as you adopt a sound thesis of stay humble, stack sats, and never sell your Bitcoin, and you're investing in that asset and not gambling in the shitcoin casinos, then you'll be fine, even if it goes down or if it goes up, because you're just going to accumulate more and you're never going to sell it. So it doesn't really matter.
Will it be rhyming? Hell yes. So liquidity is rising. Okay, so what's really going to push a massive rise in liquidity? Well, hello, the PBOC. We've been using this chart of the Chinese central bank balance sheet, which is the only major government using their balance sheet right now, versus 10-year bond yields with like a 2-year lead. And it's been working perfectly since we started pulling this out in 2022. And what it's suggesting is we're now in the acceleration of the use of the PBOC balance sheet. Balance sheets are like the most powerful force multiplier. Somebody's going to be using one somewhere. Back in 2017, it was the Chinese that drove the entire crypto cycle. because the US was tightening rates, and it was doing QT. I mean, all of the bad things, all overridden by the fact that the PBOC, the UK and the ECB all stepped on the gas. The PBOC is going to be stepping on the gas. Interesting. Look when it peaks. It peaks in 2026. That's super interesting. We also know that gold leads by a significant period of time, about 12 months versus ISM, and that's telling us that, you know, in 12 months' time, we're still not peaking the business cycle. Has gold peaked today or not? I'm not sure. I still kind of think it goes another leg from here, but we have some more volatility, more correction, another leg higher. I'm indifferent to it. I'm not in the gold trade right now, but what it does is give us a lead on the cycle. So go back to the gold chart. This is the chart that everyone on Twitter has got a different time horizon for. This is the one we've been using. I've not really shared it super publicly, but this is gold with a 188-day lead, so 6 months lead versus Bitcoin. It's a stunner, eh? It's an absolute stunner. So as of tomorrow, every single fucker on X is going to be using this chart and claiming it's theirs. If you would just remember, now the problem with this one is not the pink GMI one. So if you see this, just make sure that it's our chart, because I've not seen this one. Everyone's using like a 90-day one or a 60-day one. This is the one, I think. What we've got is a slight divergence against, I don't think you can see my mouse, but there's a slight divergence versus that chart. And that doesn't look anything on the chart. I mean, it's noisy, right? Nothing fits perfectly. Keep trying to say this 1,000 times, and everyone goes, oh, why did that chart break? It's like, morons, please listen. You're not serious people. So what it suggests to me is we have catch up to do, and that goes into the end of the year. And then we'd have a period where everyone says the cycle is over, and what happens is nothing. The bears get really aggressive and it doesn't work. The bulls get miserable and start questioning their own lives and whether they fuck this whole thing up, and nothing happens. And then eventually, you know, April, May, as ever, it explodes higher again. That's what this is telling you. I think this is probably the closest estimation in my head and what I think plays out. Let's go to April 17th.
So that is very interesting and telling. Again, yeah, if you want some kind of forward forecast. So he's saying right now it's going to be kind of like choppy at the end of the year, but there will be another period of like what we're seeing now, where you will have people screaming that the sky is falling and the cycle is over and Bitcoin's in a bear market, and there's going to be another leg up. So it's like right now we're down. Showed you that we're sitting at fear and greed at 24. Just the other day it was at 20, and there are tons of X posts and YouTube videos of, yeah, are we in a bear market? Is the 4-year cycle over? Was at the top? So it's interesting to see that. And also what's funny, and I just looked at this myself, this is literally, what is this correction? Like 22% correction so far that we've seen. So we haven't even seen the like extreme bear market corrections. So we have a 22, 13 and a half, and 19, the one that went down to the 80s earlier this year. So, I mean, I guess it depends on what your definition of a bear market is and how long, you know, you believe it lasts. But this one was 50 days. This correction was 20 days. And this one so far has been 30 days. So yeah, a 22% correction definitely sucks, but we're still above 100K right now. But it just feels, you know, bad or horrible, more worse than what it actually is. Like they say, don't let your feelings, you know, guide your actual execution. So let the data drive your decisions. But that's easier said than done. I know, like, even though I'm staying humble, stacking sats and just living off my Bitcoin, not selling it, I feel different when I see Bitcoin dropping than when I see it going up. Even though I have buy orders in and I'm like excited that I'm buying the dip, there's a part of me that's like, okay, I think it's dipped enough. So I get it. I have not been in this game long enough to like just, you know, turn into a robot and mute my emotions. But at least I have a thesis where I don't let those emotions dictate or control actions drive my behavior.
17 to 18, there's a similar pattern here, similar kind of part in the cycle. Obviously, we think the cycle extends, but there is similarities, and we've got alligator jaws. Oh no, alligator jaws. What normally the alligator jaws will do is Bitcoin should be at about 140,000 now, but it's not. So it's diverged a bit. Oh, it's all broken, it's failed. No, I'll explain why. Because there's always reasons why things are different. Here's Bitcoin 2020 versus 2021. This seems like it's the right point in the cycle versus the previous chart, which was the final year of the cycle. This is the prior year of the cycle. And what we've got is this divergence again. I mean, look how beautifully tight that correlation is. Alligator jaws. Oh, well, it's all broken down, Raoul. This is all worthless. Spurious correlation, blah, 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 blah. Sort of. NASDAQ versus Bitcoin. NASDAQ's been doing great. I've seen all of you kind of paper-handed ninnies all going, well, I'm just going to trade tech stocks now. And what's hilarious is the amount of people from crypto have gone, well, it's gold. I'm going to buy gold instead. It's all the same trade, leads and lags. But everything divided by Bitcoin is down 99.9%. over time. Just remember that while you're switching around. Tech stocks, I love, great opportunities. Nasdaq's been stronger than Bitcoin. What gives? Aren't they supposed to be all driven by the same liquidity factor? Well, what gives is, well, here's the liquidity factor, global M2 and Nasdaq. I'd rather use total global liquidity, but this is a weekly chart that makes it easier. Basically, 97.5% of all of Nasdaq is explained by the one variable, the most powerful macro variable on earth, liquidity. And this is a proxy for total global liquidity. In Bitcoin, it's 90%. But occasionally, look at this in the Nasdaq. Do you remember when we came out and said, you need to buy the Nasdaq, it's well overshot versus liquidity? Guess what happened? The alligator jaws shut. We saw the alligator jaws the opposite way around here. It works because it's 97% of everything that happens to the Nasdaq is the one variable. So why is this going on right now? Why is the Nasdaq diverging? Why is Bitcoin diverging from 2020? Why is it diverging here? Why is it diverging here? And the answer is, you haven't heard this from anybody yet, but this is, I talked to you last month in the Drinks with Raoul that the thing that is happening is the Fed were tightening because the Treasury General Account was being built ahead of...
The pause there since he had a lot to say previously, but he was basically showing, again, Raoul likes to show his research and the stuff they put together. And he's right. Nobody else was combining these macro data variables before he started putting this kind of stuff out there, because that's where his kind of bread and butter came from. And he was showing the different charts with the NASDAQ and where Bitcoin is at versus previous cycles. And when he's talking about alligator jaws, it's like showing the chart diverging, basically. And in chart analysis, TA, I guess you would say, typically the jaws shut and the things come correlated back together. So that's all he's really trying to say. And now he's showing you why it's diverged. And, again, it's up to you to believe this, but the man does his research and he's got skin in the game, and he's not selling you, Raoul token or anything like that. So it's like, might be worth listening to and create your own thesis from a much bigger zoomed out picture.
Of the government shutdown. The Treasury General Account got built. Meanwhile, the reverse repo got drained to zero. So there's one lever. If they don't use the balance sheet, there's one lever left for the Treasury and the Fed to use in driving liquidity currently. And that is the Treasury General Account. That's the checking account of the Fed. And so they've been building it up, putting some cash in the system ready for this moment. And what they then do is they will then release it by spending that money. But there's an issue with spending that money. There's a government shutdown. There's nothing to spend it on. So what we've got is this period since kind of end of September, October, when, guess what, crypto started underperforming, where liquidity has stopped at the lows. And this is the lows going back several years. And that's normally driven by the Treasury General Account rebuild, and then it normally bounces back in quarter end. But we have both of those factors and it's not bounced back because there's nothing to spend the money on because the government is suspended right now. So what you get is this weird pattern where there's no liquidity because they're not using stuff like the SFR, SLR, all of these other acronyms to inject money into the banking system. They're trying to get there. The Fed is cutting rates, but cutting rates doesn't really change liquidity. It changes financial conditions somewhat, but it doesn't change liquidity. So liquidity is kind of trapped in the US. And the US is quite dominant in liquidity because the dollar is the world's reserve currency. So this period of the government shutdown means that crypto's weak. Why is Nasdaq not weak and crypto is? Well, Nasdaq's been choppy. It's basically where it was when this whole period started. But crypto's weaker because crypto's further out the risk curve. There are no earnings in crypto, really. These are very long duration assets. So they are the most susceptible to liquidity. If liquidity withdraws, they fall the most. If liquidity comes in, they rise the most. So here we are where liquidity is being withdrawn or withheld, not really withdrawn. They're not trying to do that. They have no choice. They have no way, unless they can get through stuff through Congress, to inject liquidity unless there's a mini crisis. And we've seen a bit of wobbliness in the plumbing system, but not enough for them to actually go and do something to inject liquidity. So I'm sure Scott Bessent and I'm sure the Fed are looking at this thinking, Christ, we've got no liquidity. We saw South Korea asking for unlimited swap lines. What does that say? It tells you the Eurodollar market is too tight. So US liquidity, because it's still constrained by this one factor, there's no balance sheet being worked, there's no reverse repo being drained. We've got this one factor, and that's supposed to be driving all the US dollar liquidity. Well, that struggles. It struggles because it's not big enough to go all the way out to the Eurodollar markets and to the South Korean banks and the European banks and the Japanese banks. So they need swap lines. So it's telling you that things are tight. And we know the answer to tightness in liquidity. It is the opposite. It is more cowbell.
And that's a great place to end it. So basically, the TLDR is the TGA, Treasury General Account, is sitting with close to $1 trillion ready to be injected and sent out, but the shutdown is currently going on. So you can kind of hedge your bets that the minute this stuff gets pushed forward, there is so many things backed up behind this dam. So this liquidity being injected, the Fed cutting rates, the new Fed chair coming in to cut rates even more in second quarter of next year. The clarity bill getting passed, ETFs sitting on the desk of the SEC, but the government shutdown is affecting that. So there's so many positive things that even if we are quote unquote in a bear market right now, it's definitely not over. Like even if you correct further down from here, there's so much pent up opportunity, demand, liquidity for Bitcoin to rebound and push higher that it's like, yeah, don't throw the baby out with the bathwater. So stay humble, stack sats. All right, smash that HBO special, help brother out, like, subscribe, comment down below. And until next time, lift daily and achieve your impossible.